Hi there guys, it's Jacob here. Welcome back to my channel. So today's video is going to cover the cost differences between having a 40-year mortgage versus having a 25-year mortgage. Now the reason for today's video is I was reading an article earlier that said HSBC have just launched a new 40-year mortgage product. And it got me thinking, even though there are some advantages to taking out a 40-year mortgage, such as lower payments, there's also the negative side of it being you pay that amount for a much longer period of time. So I wanted to do some calculations and this is what I came up with. So see what you think to this. So if a person was to take out a £200,000 mortgage, which is actually the average number that somebody takes out for a mortgage, and then they pay a 5.5% interest rate, which is pretty much what is on offer today, their payments over 25 years would be £1,228 a month. And they would pay back a total of £368,400 over the lifetime of that 25-year mortgage. Now, compare those same results. So take a £200,000 mortgage, 5.5% interest rate. However, this time we'll take it over a 40-year period. Now, the positive is your payments would only be £1,032. So nearly £200 cheaper than the 25-year mortgage. However, now this is the real negative. Over the lifetime of the 40-year mortgage, you would pay back £495,000, which works out to be £126,689 more than the 25-year term. So this is what I was saying before. Even though a 40-year mortgage may seem like it's saving you money in the short term due to the fact that your payments are lower from the beginning, which of course is appealing to anyone to have lower payments, especially as we're going through the cost of living crisis at the moment. And to be honest, even just affording a house at the moment is very difficult. But as you can see, that attractive low payment has a penalty to it long term, which is you end up paying a heck of a lot more money over the long term lifetime of the mortgage. Considerably more, like I say, £126,000 more. Now, that's not to say that you shouldn't go for a 40-year mortgage. You might be thinking after that, wow, who would go for a 40-year mortgage? But like I say, there are advantages. Now, of course, the lower payment is one, but also you do have the ability with most mortgages to pay down the mortgage, which means you don't have to keep it as long. So for instance, if you took a 40-year mortgage with payments of £1,032, you could keep that payment threshold at £1,032 and overpay every month, or maybe not every month, maybe just every now and again. And you could reduce that 40-year term down to a 30-year term quite easily, making overpayments throughout the lifetime of the mortgage. And the advantage of doing that is you get to keep that £1,032 payment every month, rather than committing yourself to a 25-year mortgage, which means your commitment is then £1,200 a month. That makes it harder to do overpayments. Now, granted, you're going to pay it off sooner, but if your initial worries in the beginning is, can you afford this mortgage, then you don't want to maybe commit yourself to a higher payment for the lifetime of the mortgage. You could actually commit yourself to a lower payment and then choose to overpay as and when it suits you, as and when you have free money put aside to spend on the mortgage. But there could be many months that you don't have free money, and in those months you'll be glad that you took the lower payment on the 40-year mortgage. But if you're thinking about taking a 40-year mortgage and you're not somebody who thinks they're going to overpay, then to be honest, I would steer clear and I would go for a lower term, because ultimately, as I said before, the advantage of the lower payment for the 40-year means you're going to be hit with that penalty of paying 10 or 15 years longer than other mortgages, such as a 25-year term or a 30-year term. You're going to be paying a lot longer. And what that means is you end up paying so much more money for the actual mortgage product. Now, if you're taking a £200,000 mortgage, it sounds scary when you say it, but even on a 25-year term, you're paying £360,000 back to the bank. So almost double what you borrowed in the first place. With the 40-year term, you're paying nearly £500,000 back to the bank. So 2.5 times what you initially borrowed. Ultimately, you'll make your own mind up as to what product is best for you. There is no right or wrong. Whatever you can afford and whatever term you would like to commit to is obviously what's best for you. Take advice from people before signing onto a different mortgage term. Take advice from online. You could get financial advice from a mortgage broker, mortgage advisor, an independent financial advisor. There are lots of places that you can get advice from. But ultimately, on the outset, a 40-year mortgage may sound quite scary. I mean, if you're 20 years old, you might pay it off when you're 60. If you take one out at 30 years old, you'll pay it off when you're 70. I mean, I couldn't imagine taking a 40-year mortgage at 40, not paying that off till 80. And to be quite honest, I'm not sure many banks would even give you a 40-year term if you're into your 40s or older, because the chance of them actually getting that money repaid becomes quite difficult. And, so I can understand why only certain people may be able to apply for these 40-year mortgages. There'll be hoops to jump through, I'm sure. But if it helps you get on the property ladder, taking a 40-year mortgage, if that is the only way you can get on the property ladder, then I would seriously consider using that. Because like I said, you do not have to commit to keeping that mortgage for 40 years. You can overpay and you can bring down the term of the mortgage over time. Maybe not the first year or the second year, because quite often those are the years where you're learning to cope with the payments, you're learning what other bills you have, and that is a transitionary process, getting used to paying that money. But later in life, maybe when your income's gone up a little bit more and you're far more settled, you could review your payment structure. You could increase your monthly payment, which is a form of overpaying, or you could just do one-off overpayments whenever suits you. And you can bring that 40-year term down to 30, to 25, whatever you can. But a 40-year mortgage ultimately could be ideal way to start and get on the ladder, keeping the payments low. But guys, what do you think? What would you do? Would you stick to a 25 or a 30-year mortgage, or would you go for a 40-year, knowing that the payments are a little lower, but ultimately you could be penalised if you kept it for the term? I'd be interested to know what you think. Let me know down in the comments below. Now, if you enjoyed this video, guys, hit the like button, hit the subscribe button. If you'd like to buy me a coffee, there's a link for that too in the description. And guys, I'll catch you in the next one.